If you're wanting to develop a passive income for retirement, we're going to take a look at the top paying dividend ETF funds that beat the S&P 500. So stay tuned for the full episode. Thank you for watching. This is Richard with Wisdom Investor. We're going to take a look at the top paying dividend ETF funds that beat the S&P 500. Now, when we talk about passive income for retirement, basically there's three ways you build this. One, you generate income from the yield that the dividend ETF is paying. Also, you can reinvest those dividends and your number of shares will increase. And if you get an appreciation on the stock price, that will also help you build your dividend income. Let's review some of the benefits of growth ETF dividend funds. Why growth dividend ETF funds? One, ETF funds buy the individual stocks. It saves you time. If you're building your own portfolio of stocks, which is definitely a good way of doing it, but it does take time and you have to buy and sell all those stocks yourself. Also, you build diversification. Things to remember too, ETF funds can still change in price just like stocks, and ETF dividends can also fluctuate. Let's take a look at some of the advantages of owning a portfolio of stocks. Keep in mind our main emphasis here today is dividend ETF funds. Advantages of owning individual stocks: you can selectively manage the stocks that you want to own. You can also add or remove individual stocks from your portfolio. Disadvantages of owning individual stocks for developing a passive income: to get a diversified portfolio, you need to have at least 15 to 20 stocks. It does take time to manage, to buy and sell, and you need to take a little time to investigate each individual stock. If you're going to develop a successful passive income strategy for retirement, you need to have a good investing strategy. Here's some investing strategies to be aware of. One is buy and hold. On the buy and hold strategy, you need to understand when do you need the money. And then also, how old are you? Then there's the technical analysis strategy where you can determine when to sell, when to buy. And then there's the dollar cost average strategy where you break up your available investing dollars over a 12 to 18 month period. Let's take a look at these investing strategies. We're looking at the S&P 500 from 2000 to 2012. If you're in the range of 25 to 35 and you want to develop a long-term plan, a buy and hold, if the market dips, you have plenty of time for the market to recover. Now, if you're going into retirement and you're holding your funds and the market should dip 30, 40, 50%, it can take time for the market to recover. The other strategy we talked about was technical analysis. And basically on technical analysis, a good plan would be to be in the market when the dividend ETF funds are above the 250-day moving average. As the dividend funds move below the 250-day moving average, be out of the market. And then as the market dips and recovers, get back in the market when the dividend ETF funds are above the 250-day moving average. There's many other strategies along this line. I'm just sharing this one. If you have a strategy you like, share that with us. We're going to get into our best dividend ETF funds. We're going to compare these to the S&P 500. The dividend for the S&P 500 is 1.39%, and the last 3 months return is 7.98%. Let's first look at the makeup of the S&P 500. The top holdings are Apple Computer, Microsoft, Amazon, Facebook, and Alphabet, Google. Let's take a look at our list of top dividend ETF funds. This is a partial list. I'm going to go over the full list here in just a moment. But we have Invesco S&P 500 High Dividend ETF. Has a dividend of 4.89%. Last 3 months, this fund has been up 19.38%. Now, the top holdings that we just looked at for the S&P 500, primarily in the technical area. Let's see where the SPYD has its top holdings. Maybe that'll be a clue why it's up 19.38% the last 3 months. If we look at the top percentage of holdings for the SPYD, we'll see financial services is the top holding, followed by real estate. Interest rates have been increasing, and many of the financial stocks have been increasing. I think this is one of the reasons this has lifted higher. The next fund is the SPHD by Invesco, 4.57 dividend yield up 11.78 last 3 months. And then we have WBI Power Factor up 17.87% last 3 months and has a dividend of 4.3%. If you're building your own portfolio of individual stocks, generally speaking, once you average all the dividends, you're going to average about 3.5 to 4.5%. You can see if we compare these funds to the S&P 500, all of them have a higher dividend than the S&P 500. Also wanted to note the Wisdom Tree and Invesco S&P 500 pay dividends on a monthly basis. We looked at some advantages and disadvantages of Dividend ETF funds versus portfolio of stocks. We also looked at some investing strategies. We also looked at a list of the top Dividend ETF funds. If you have any comments or your own strategies, leave a comment. Stay tuned for the next update.